Good evening to all my friends out there. Welcome back for joining my new webinar session today. The topic for today that I would be discussing is type of traders. Okay. We have previously, previously spoken about type of trading. Okay, how you can have a trading plan. We have discussed about risk management, how you can manage your risk. Today, what we are going to discuss is like what kind of a trader, like how many kinds of traders are there. All right. So I'm welcoming you back again. Okay. Um, Usually we have a webinar on a Saturday, but today it's a Friday evening. Thought of just changing a date for today and doing it on a Friday because Saturday is a weekend and most of y'all are busy spending time with your family. All right. Nevertheless, let's not waste time and let's begin with our topic for today, which is type of traders. All right. Before I start the topic, as usual, what we will do is like at the end of the session, we will have a question answer session where whatever doubts you have or whatever question you have, there would be a chat option there. You would be penning down your question, and I would try to answer most of the questions. All right. And we'll try to give the best answers for your queries. All right. So let's go ahead and begin our topic today, which is types of traders. Okay. Now, when you enter the market and when you are trading, the first question that you should ask yourself is like, what kind of a trader are you? All right. Now, there are different types of traders. There is scalper, there is a day trader, there is a swing trader, and there's a position trader. Now, you are going to decide, yes, you are going to decide what kind of trader are you. Now, I have spoken about this before also that uh, every person is different, every body is different, every person personality is different. All right. So, similarly, when you do trading, accordingly, the trading pattern is also different. All right. So today we are going to learn about what kind of a trader are you. So let's go ahead and start with the first kind of trader. Okay. Now each trader is unique. There are over 8 billion people in the world and not even one person is exactly the same. All right. Even if there is twins, identical twins, even their fingerprints is different, or somebody have their own look, or somebody like different, like if somebody like pizza with pineapple, somebody like pizza with potato chips, somebody might not like it. All right. So everything is different. Every person's way of doing is unique. Trading is it the same way. Our unique personality differs us from the other person. All right. Now some traders might be very aggressive mind. They might be traders who just want to get over with the trade immediately, and some kind of traders would be a very relaxed person. Okay, sitting at a beach having a sip of coffee, enjoying. All right. And so again, personality, depending what kind of a trader are you. Some may like taking small wins. Okay, some might not like it. Some might will to hold the position for a longer period of time. Some might want to take huge profits. Some might want to take small profits. So depending again what approach you have towards your trade makes a lot of difference. So there is kind of approach that you have to make towards your trades. Now, the point is that no two traders are alike. Okay. Now, let's say there are two people who enter the market at the same time with the same rules, but it might not be the same that he will close at the same time and the other person might also close the position at the same time. Now, is that a bad thing? No, not at all. Why? Because as said, that every person is different. Your one kind of trading will not be similar to the other person's trading. It will differ. So probably a bought gold at 1640 and he closed it at 1650, and B bought gold at 1640 but he closed it at 1643 or 1642. So he is satisfied in a small profit. B is A is satisfied in big profit. B is satisfied in small profit. Again, that is the difference. So our uniqueness is what makes the world go round. So it is important to know your lifestyle, your personality, your strength, your weakness, and then trade accordingly. I've discussed this in previous session also when we were talking about trading plan. I've discussed about how your personality makes it so plays a very important role when you are trading in the market. Okay. Now the first kind of trader. Now the first kind of trading method is scalping. Okay. So when I say scalping, now if you are a kind of a person who likes to sit on a roller coaster ride, who likes horror and thriller movies, who is ready to get into a market at any point of time and exit, then you belong to a scalping group. So you can consider yourself, that is, you are into scalping group. Now how you can consider, what do scalpers do is like, now the objective of the scalpers is like, they are very much satisfied with a small amount of profits. So what is their job? They be in front of the system and they look out for every trade. So they will get into the market, they will place an order, they might book $1 profit or a $2 profit, and they exit the market. So what is scalping? You enter the market and you trade and you move out of the market. You again place a trade, you book some profit, and again you move over. So you are that exciting personality who likes to get into the market immediately and exit immediately. Okay. Now, scalping in simple word means that you are satisfied by booking small profits. You don't look out for big profits. What you look out as small profit, but with a maximum of trades. So you try to place 100 of trades in a day and you try to book small profits on that trade. So if you are that kind of person who loves to trade and book small profit, then you belong to scalping group. Okay. So you know what scalper is? This is a scalper. Okay. Now what makes scalping so attractive to traders? Sorry. Okay. Now smaller moves. Now the beauty of our market is that the market moves in both the direction. It goes up, within a second it comes down. Now why do this happens? This happens because of the large volumes in the market. So the market tends to move up and it moves down. Now when the market moves up and down, these kind of small movements, okay, is a movement that a scalper looks for, because a scalper can book profit with the small movements in the market. As said before, that scalpers can place up to 100 of trades in a single day by seeking small profits. But at the end of the day, all the positions are closed. Now, because scalpers are the people who are in front of the system looking at the chart, okay, who can give their time on the screen, scalping is for them, because it requires a lot of focus, it requires a lot of thinking. Okay, not, you have to be very quick in entering the market and exiting the market to book your profit. So if you belong to that category, you can consider yourself that you are a scalper. Okay, it is not for those looking to make big wins all the time. It is again for the people who wants to book small profit over a long run. All right, so in a day, if you are making 100 trades but you're trying to make small profit, then you are a scalper. Now, these small wins are achieved by trying to profit with the quick changes in the bid and ask price. So, you buy and you sell, you buy and you sell. So, scalping focuses on a larger position size from a smaller profit in the shortest period of holding time. So the scalper will close the trade in a minute or in few seconds. Okay, now the assumption is that the price will complete the first stage of the movement in a short span, and you take the advantage of the volatility. So in simple words, again, who are scalpers? Scalpers are the people who try to make multiple of trades in a day with an intention of booking small profits, but with maximum trades. Okay, now when what can you consider? Now if you are a scalper, obviously you will need to look into the market which has highest trading volume. So now such kind of pairs which has higher trading volume, you can consider euro usd, jpp usd, usd chf, and usd jpy. These kind of liquid pairs have a high volume of currency. Now you can trade during the busiest hour because you get multiple of opportunity to enter the market, book your profit, and exit. Okay, now the most volatility market or the most volumes happens at the day during session. Okay, I've given an EST timing here, which is 2 a.m. to 4 a.m. and from 8 a.m. to 12 noon. Now, any kind of a trader you are, what comes in picture is your money management. So even if you are a scalper booking small amount of profit, what is important is that you stick to your risk management practice. Remember my third webinar session where I spoke about risk management. Okay, because at any point of time in your technical path, a fundamental news can bump in and can change your trade. So if you are bullish and if there is a news which might not favor you, and if it goes against you, then you might have a loss. So any major news can also impact because of the high volatility and trading around with a lot of news reports. It can be very dangerous. So whatever trading you're doing, make sure that you stick to your risk management practice. Now, second type of trading. What is second type of trading? Second type of trading is day trading. Now, what is day trading? Now, day trading is similar to scalping, but the only difference is that it you will have one buy position and you will sell that position by the end of the day. So you don't tend to enter the market every time. You don't tend to enter the market every time. Now, this kind of trading, okay, is a short-term trading style, unlike like scalping. Okay, you take one trade and you close the trade at the end of the day. Now, these kind of traders, okay, likes to pick up a trade at the beginning of the day. So they will be careful over the news at the technical reports, and they will enter the market at the in the morning, at the daytime. Okay, and probably they will end their trade the evening before the market close. They will either close the trade in profit or in loss. They don't like holding their trades overnight. So day traders don't like holding their trades overnight. They tend to close their position on the same day. Now, who for whom this day trading is suited? Day trading is suited for forex traders that have enough time throughout the day to analyze, execute, and monitor the trade. Okay, so people who can give their time to analyze on the particular instrument, who can execute it, who can monitor it. Day trading can be done by those people. Now typically day traders are they rely heavily on technical analysis. So they see when is the entry price, when is the enter point to enter the market, and when is the exit point to exit the market. Okay, now For a day trader, you will have to consider, okay, it is important to have any kind of a trader you are, it is important to have fundamental news also. Why? Because fundamental news will help you to enter the trade in that direction. So let's say if the interest rate is going to hike up, okay, you know what the instrument is going to do. Will it going to go up or it is going to go down? So you will want to keep yourself up to date with all the economic news, okay, so that you can make your trading decision at the beginning of the day. So what are you doing? You are keeping a track of all the news by itself to enter the market at the daytime. Okay, do you have time to monitor your trade? If you have a full-time job and you are doing your trade in between, okay, so there might be a possibility that you might be check out from your job, because day traders requires a lot of time, as I said, to look at the chart, to analyze the chart. So if you are a person who is a full-time worker, day trading would not be your cup of tea, because it requires a lot of attention to keep a track on the charts. Okay, now there are different types of day trading. All right, we have different types of day trading. Now, day traders who believe in trend trading. Now, what is a trend trading? It's a pattern. Trend trading is a pattern when you look at a longer time frame. When I say a longer time frame, it means the resistance and the support, which decide what the instrument is happening. Is it going to go up or is it going to go down? So probably you will look at the chart, you will see here the big lines here up. Okay, these are the big zone, these are the big zone. In this big zone, it means you might be analyzing a chart of 4 hours. Okay, and in between you will have a small zone. You see the red line and the blue line here, these are the small zones where which will help you to enter the market, whether it is going up or down, for a period of a 15 minutes chart. So in a big zone, you add a small zone, and in that small zone, it gives you an idea in which direction you can take a trade and enter the market. Second type of trading is counter trend day trading. Now, counter trend day trading is similar to day trading. You will go get a zone of a support and a resistance, and in that you're going to create a small zone. But what is the change? You will do opposite. You will reverse. So if it is gone and showing that it has gone to a maximum of bearish, so you will consider from that point it to go up. So the idea here for counter trend day trading is to find that at the end of the trend, okay, you get a reverse trend. Okay, now it can be a little riskier, okay, because you don't know that from the end it might go little there, it can further go down. But if you enter at the right point, you can make huge profit. Now, looking at this chart, it is the same chart which I had considered before for trend trading. Okay, same zone. All right, the bigger zone of a 4-hour chart and the smaller zone here. Now you see that the market is going down from here. You see the red arrow? It is going down from here. Now, at a certain point, it has reached here. So now once it has reached here, the moment it reaches the base of the interzone, if you are a counter trader, you will expect it to reverse it back. It means it is going to go upward. So it means you are a person who loves counter trend trading. Moving on to the next one, we have a range trading. Now, range trading is also called as channel trading. Okay. Now, what basically a trader do here, they will analyze the chart patterns. Okay, they will see if it goes high and low, whatever the high and the low happens during the day, keeping a close eye on the difference of this point. Okay. Now, for example, if the price has been rising of the support, so let's say here, okay. So you see, this is the range. So it means it ended here. So if you are using a range trading, from here, from down, it is going to go up. So from the support, it will go to the resistance. Now you'll keep a track. Again, it has come back to the same support. Now from the same support, it is going to the same resistance. So if you are doing this kind of trading from support to resistance and again from support to resistance, it means you are following a range trading pattern. Okay. The fourth type of day trading pattern is breakout trading. Now, what is a breakout trading? Now, breakout trading is when you look at the range a pair has made during certain hours of the day. So, certain of hours of the day means if you're looking at a technical chart of 4 hours, then you place a trade on either side, thinking that either it will go up or it will go down. Now, this is particularly effective when a pair has been in a tight range. Okay. So let's see here. This is the support and this is the resistance. Now what has happened is, like, this is the break even point. It has come here also and it has come also. Now what will you expect? That if it has touched the support, it will further go down, and if it has touched the resistance, it will further go up. Okay. Then there is news trading. If you are a person who is typically always following news or fundamentally, then you are a person who is a news trader. Now, people who follow news trading don't follow more of charts or technical analysis. They wait for the information to release. So like if there is any FOMC report, or if there is any interest rate hike, or if there is any inflation price or any news coming up, a person who does trading on basis of fundamental news, he will keep up to date record of the economy data. So what includes here? The unemployment rates. You will see every time, if you are already trading with SmartFX, uh, we normally send all our clients date updates on the reports, that there is an interest rate hike report, there is a Fed report, Mr. Powell is going to speech, there are speech today also. So all these things, so you will trade on the basis of interest rate, inflation, any unemployment. All these factors will help you to trade market in that direction. Now, with news trading, traders need to have a solid understanding of a market in which they are trading. Okay, they have to develop exactly at what price to enter, okay, and at what price to exit. Now, there will be alert to various different news resources at the same time. So you see, recently, if you have seen market has been extremely volatile. Any instrument moving, you see Putin giving a speech, then you see Powell giving a speech, then you see Europe has a recession news coming in. So there's a lot of multiple of things together coming in. Now, the drawback of the news trading is that anything altogether coming in can make a huge difference in the volatility of the price. So more often than not, the expectations, when, let's say, for example, if there is a news coming of interest rate and you're expecting that the market should go up, it might not be in your favor and it might go down. Okay. So what have we covered? We have covered scalping, we have covered day trading. In day trading, we have covered different types of trading, which was trend trading. We have the counter trend trading. Then we had the range trading. Then we had the news trading. Okay. And I think I missed on one. I think that was breakout trading. Yeah. All right. Now, the next type of trading. What is the next type of trading? Is a swing trading. Now, what comes to your mind when you think of a swing? A swing, you put a child on a swing, it goes back and it goes front. It goes back and front, back and front. So swing trading refers to a medium term trading style that is used for forex traders who try to profit from price swings. Now, in this trading style, you need to have a lot of patience. Now, if you think that you are a person who is okay to put a trade and go for a holiday, then you are a swing trader. Okay, it means that you can hold your trade for several days at a time. Now, what does a swing trader does? A swing trader, he will identify a trend and he will tend to hold the trade at that period of time. Now, that time can be either 2 days or it can be several weeks. Okay, so you are a swing trader is a person who will not close the position immediately. He will try to hold the trade. Now, this is ideal for which people? This is ideal for those people who can monitor their charts throughout the day and can give their time couple of hours for analyzing the market every night. So every night you have a time to sit and check on the market events. Now, swing trading is best suited for those who have full-time job or school, but have enough free time to stay up to date with what is going up in the global economy. Again, swing trading strategy again depends upon fundamental news as well as on technical analysis. Now, in order to determine whether or not particular currency may go up or down in the near future, you have to keep a track on both the segments. You have to keep a track on the fundamental news as well as on the technical news. Now, whatever kind of trading you all do, my friends, whatever kind of trading, what is important is that every trading style has its plus points and has its minus point. So it has its own pros and it has its cons. So now it is up to you to identify what kind of a trader are you, what kind of time you can devote to do trading. On that basis, you can analyze and you can consider yourself that whether you are a swing trader, whether you are a day trader, or you are a scalper. Moving on to the next slide. The next is position trading. Now, what is a position trading? Now, position trading is exactly like a longest term of trading. So you can say if you are a person who have a lot of patience to wait and hold your trade, consider yourself as a position trader. Now, the position trader will not look out for any short-term price movement. So let's say if you are a person who was trading into gold and you have shorted gold when it went to $2,000, you have short your position from there. It went to 1614, but you are expecting that no, it is going to go to 1550. So you are that kind of person that who will not close the trade in between, but you will wait for your target to reach at the lowest and close your position. Now, in this type of trading, it is similar to investment. So what are you doing? You are taking your money, you are putting it in one instrument and assuming or considering it with your analysis that from this point, it is from point A, it is going to go to point B over a period of 1 year time or over a period of 6 months time. So you are a positional trader. Now, this kind of trading requires super patience. Super patience means super patient. You cannot close your trade in between. You need to execute your trade and stay to your trading plan of what you have thought about. For this kind of trading, you have to have a very good understanding of fundamental use. So let's consider a very simple example. Okay, now when the stocks are new in the market, okay, and if it has gone to the lowest, people tend to buy it at a very low price and hold it to until it goes up. So you have a target set that you know this price for the current particular stock is $1 now, but over a period of time, over a period of 6 months, it is going to be $100. So even if it goes to $90, you are not going to close it. You are going to close it at a target of $100. So you know you need to have a super patience for it. Now, fundamental dictates the long-term trends of currency pairs. So how do you come to know that you want to go for a position trading, for a long-term trading? Basically, you look out for the currency pairs that you understand that what is the economy for that particular country and what it might look like. So for example, looking at Japan, you think if it is already gone up, the rates are already high. Okay, now if you are a person who have invested it at a lower price, so currently the price is already very up, it's extremely high. All right, so you, what are you looking at? You are looking at a very high rate of huge improvement of profit. Okay, so now because your trades are long, because the time for holding it is long, your stop loss is also very long. So what will happen in this kind of trading? You cannot expect that, you know, I am buying it at $1 and it will easily go to $100. No, my friends. So if you're buying at $1, it might go to $10, it might go to $20, it might go to $99, and it might come back to 1 without reaching 100. Okay, so for that you have to make sure that you have a super patience, and you should have your stop loss also, because if you don't have your stop loss, so if you don't have your stop loss will also be huge. But at the same time, if your trade, if your assumptions, if your analysis is correct, it will give you huge profit. So the very important thing is like your risk management. Again, I am be repeating these things in all of my webinars again and again, because as a trader, as a beginner, as a newbie to the forex market, it is very important to understand that trading is not a game where you just enter, you buy and you sell. Okay, there are certain disciplines that you need to follow, there is certain risk management that you have to follow. You have to understand what is your capacity to take risk, what is the kind of a trader you are, what is your trading plan. All these factors you have to consider and then enter into the market. Now obviously it will not be a one day game that you will understand everything. You have to give your time, you have to understand the market, you have to read the fundamental news, you have to keep a track over it, and then definitely you are going to reach a point where you know how to trade in a perfect manner. Okay, now in, as I said, if you're a position trader, in this you might see a huge swing. What is a huge swing? Huge swing is like swing trading. Swing trading is a short position trading. So people who are looking out for a short term trading, you will see a lot of positions getting closed there. So you must be ready and you must have absolutely trust in your analyze, and you should remain calm if you are looking out for a big position trading. All right, now I'm sure that you have understood that what kind of a trader you are. Okay, as I said that it is important for you to understand before entering the market what kind of a trading style you prefer to do, what kind of trader you are. So if you are a scalper, you would be looking out for a short trades with a number of trades with short profits. Number of trades with a short profits, you are a scalper. If you are a day trader, what you will do, you will just buy one trade, open a one trade, and you will close the trade, okay, at the end of the day. If you are a position trader, what if you're a swing trader, what are you? Swing traders means you can hold your trade for 2 days to few weeks. And what is a position trader? A position trader is a person who enters a market and has a full faith in the self that from this point it is going to go to this point, and you can hold it even if it takes 1 year or 6 months or 2 months or 3 months. I hope I have made this very easy for you all to understand what kind of a trader you are. So when you enter the market, when you open your MT5 platform, and when you trade, you just don't enter the market, you understand your pattern, and then you enter the market. Okay, so now without um, taking this more anything further, I have already cleared the types of trading styles. Now what we will do is, like, I will be answering all the question as discussed at the start of the session. All right, please feel free to ask questions in a chat box. All right, also there are details mentioned. All right, where I have also mentioned my name and my direct number with my email ID has been mentioned, where you can feel free to directly message me, or if you have a doubt to, you can feel free to question me or connect with me, and definitely I will try to help you out. As said that, we at SmartFX, our main goal is to spread knowledge to our clients, give knowledge to our clients, make them understand what exactly trading is and how it favors if you are doing it with a disciplined manner. All right, so please go ahead, and I'm waiting for your questions so that I can answer it. Please feel free to type your questions in the chat box. So so there's no questions today. Come on, guys. I'm waiting for your questions. I hope you enjoyed the session. I hope it was easy for you all. I try to use very small little examples where it becomes very easy for one to understand, especially who is a newbie, who is a new trader, uh, and wants to learn trading. So I believe that everything has been very well said in my webinar, and there is no questions to be asked. That's what I feel. Uh, that's great. What we can do is, like, I will end the session here now. All right. Just in case if you have any questions, all right, make sure that you feel free to contact us. My number is mentioned. You can visit our website also, that is smartfx.com. I've mentioned my email as well. So do connect if you have any questions or doubts. All right, definitely here to help you out. And hi, Salam. I don't know, this is Salam to everyone. Okay, so Salam has a question, and he's saying, can you explain about bullish and bearish, how it works? So it's a very simple example, Salam. I'll give you. A bull has a horn up, going upwards, which means that the market is going to go up. A bear has his ear falling down. It means that the market is going to go down. Now, how do you make this? How can you understand the market is going to go up or down is obviously it's just not looking by the chart. As said, that you have to understand if there is any particular news in the market, if there is inflation, what will happen, if there is interest rate hike up, what will happen. Everything is related to dollar index, so you can keep a track on dollar index. If you are a trader trading into gold, you can keep a track on dollar index, the movement of it. It can help you out to understand the market, in which direction will it go. And again, there is lot, not only technically but also fundamentally, depending on the news, interest rate hike, employment rate, all these factors makes the instrument go run in the direction either up or up. Especially if you consider times like wars and all, metals become strong. So it means that is a time that gold is going to go up. Gold is going to go up, especially during a time of wars. All right. Or if there is any recession kind of thing, so gold is going to become high, it is going to go up. So on fundamental news is that you can decide whether is market going to go up, it is going to go bullish, or it is going to be bearish. I hope, Salam, that is answered. You can get those news on a lot of websites, like Daily Forex is there, Trading View is there. You can keep yourself updated with all the news. Also, if you try to connect with us, we at SmartFX, with our clients, what we do is like we send them a particular date. If there is a particular news going to be there, or if there is any speech going to happen, so it gives an idea to the clients, because we all are working, and we do understand that you cannot have a track of everything. So we try to make it easy. So if you can join our group, and we can help you out to share the news happening in and around in the world, especially related to forex, where all the economic news is being shared. Great. So I think that is answered, Salam, right? Any other question, guys? Okay. So what we do here now is there's no more questions coming in. So we will end the session here. And people who have missed previous sessions on the beginning of the webinar, my first webinar, I would be conducting those webinars again. If you, we will be sharing the links along as well. You will be getting a call from our relationship officers, and they will inform you about the new webinar happening. And inshallah, we all will stay in touch. Till then, have a happy weekend. Have a lovely evening. Take care. All right. Bye. Good night. Well, thanks, Deepak. Take care.